Everybody, welcome back to the Entrepreneur's Essentials. I'm really proud to be recording chapter 19 today, the 5 critical ingredients to build a big company. And I can't think of a better t-shirt to wear than our Dated Out World t-shirt produced during the pandemic. There's a lot of genius in this t-shirt. Of course, really captures the pandemic pretty well for tech companies. Sparkle, our owl, is wearing a mask. A baby is screaming and crying on the ground. We've all seen that have kids. All of the interruptions, which that's a silver lining too. There's a lot of beauty in that. And of course, dreaming about airplanes and all the things that we used to do before on the mug. But this was our anniversary T-shirt, our holiday T-shirt, and I think really captured this year well. And it's been about a year now since we've been in the pandemic. But Dated Out World was on my mind because this is the most ambitious and exciting startup that I've ever been a part of, and I really thought that this would be appropriate for this chapter. So here we go, chapter 19, the 5 critical ingredients to build a big company. For this lesson from the Entrepreneur's Essentials, I decided to go with the recency effect yet again. Last weekend, I passed on investing in a new startup for 2 primary reasons: business model and team. I thought the total available market was too small and the team wasn't complete. I usually don't back a business unless there are founders that can build, sell, and service the new solution that is being brought to the market. In this case, they could build and service it, but they needed a third co-founder to sell it. This post was ringing in my ears when Brian Jacob, Matt Lessig, John Loynes, and I were brainstorming what our next startup would be. So how do I assess Data.World on the 5 critical ingredients I wrote about 5 years ago? Let's take them one by one. Business model. We modeled on GitHub's financials, which are world-class. It was recently announced that Microsoft is acquiring them for $7.5 billion, and we believe the TAM, the total available market, is unlimited for Data.World. Team. From the beginning, we had the most experienced startup team I've ever been a part of. Brian and John could build almost anything. Matt and I could sell and service almost anything. And we could recruit the team to report to us. 3, mindset. We had big plans to change the world from the beginning. We wouldn't be tempted by an early offer, just like Brant and I weren't at Bizarre Voice. 4, funding. We knew Data.World would require a lot of funding, more so than Bizarre Voice. And we knew technically it would be a much more challenging build. We just announced our 3rd round of funding this week, as TechCrunch covered, and I linked to that here on Medium. We have an all-star roster of investors that I feel very thankful for, and we've raised $45.3 million to date. Since I wrote this, we've now raised $76.3 million to date. 5, culture. We won our 3rd annual Best Place to Work award earlier this year. And I've written about our values in Chapter 18, an unusual but beautiful method of forming your company's values. We have taken many of our best cultural learnings from Bizarre Voice, HomeAway, Trilogy, Indeed, and other great companies into Data.World. I truly love our team, our work, and our environment. So here we go with this lesson from the Entrepreneur's Essentials. It was first shared at Lucky7.io on December 22nd, 2012. I hardly changed anything below, but I did make sure the grammar and links were corrected. I'm going to greatly expand on this topic, so I'll keep this lesson as short as possible. I could write a book on this lesson alone. For now, I want to quickly get down my thoughts on the 5 most critical ingredients to build a big company. One that changes the world and creates a lot of jobs and economic impact. Here are the ingredients. 1, business model. This is actually the most important ingredient of the five. Without a good business model, you will not be successful in building a large company. A good business model is one that has the margin profile that is similar or better to companies in its category. Public company comparisons make this easy to assess, and one that has a very large addressable market. How did we do that at Bazaar Voice? Well, Brant and I thought long and hard about how big the total available market, or TAM, was and what our natural extensions would be to continue growth. Advertising was one of those extensions that we visioned in the first business plan for Bazaar Voice. Now at Bazaar Voice, we have acquired Longboard Media, which in a way concludes our original vision in our first business plan. We also made sure to look at the financial profile of other software as a service companies. These benchmarking reports are easily available from investment banks such as Morgan Stanley. Morgan Stanley is the firm that took Bazaar Voice public. They were our lead offer. We set up our initial pricing calculator for the sales team to make sure that we wouldn't easily sell a client if the gross margin on the deal was projected to be lower than 70%, which was in line with publicly traded SaaS companies. I qualify sell with easily because we needed to give some leeway to the sales team in case it was a strategic account, one that got us into a new vertical or geography or product line. But on average, our initial clients signed at a projected gross margin of 70%. If we couldn't sell our first product for that, which was Bazaar Voice ratings and reviews, then it probably wasn't worth selling in the first place because we could have never built into a SaaS company that had a viable financial profile. Better to learn as early as possible when everything is malleable than learn that later. Constraint-based planning forces you to come up with a way to get there versus having a lack of disciplined planning. There's usually a way. Team. Without a good team, you cannot build a good business. My fellow partners at Austin Ventures may say this is the first thing they look for. And it is true that if you have a good business model without a complete or good team, then the team will have to be filled out or changed for you to be successful. And this process never stops because people are your biggest variable, and high growth actually puts more pressure to either bring out the best or worst in a team. What is a good team? Well, Brant and I partnered on Bazaar Voice because we complement each other very well. Like me, he is a utility player, someone that I saw amazing potential in at Coremetrics, my prior startup. At Bazaar Voice, he initially played the roles of client service, content moderation, marketing, and product management. He also assisted greatly in sales. After all, we were selling a software as a service platform, and with it came a guarantee of success with our software through the services we coupled with it. So his role was integral, and clients wanted to talk with him. I initially played the role of CEO and VP of sales. I was responsible for hiring the team, fundraising, establishing our board of directors and advisors, and selling our initial clients. I greatly leveraged my e-commerce and broad shop.org network to do so. I intentionally waited until we were 12 months old and had our first million in annual client bookings to hire our first VP of sales, Michael Osborne, because I wanted to run with my network first and get the business model right before we added too much fuel to the fire. Momentum has a way of building, and that goes for both positive and negative momentum. Mindset. The founding team must have a mindset to go long. Brant and I could have sold Bazaar Voice for $25 million when the company was a year old. A public company offered to buy us. That discussion took us all of 5 minutes. Instead, we doubled down. We wanted to go for a much bigger outcome, which creates larger ripple effects. If we had sold for $25 million It would have been enriching to us personally, but it wouldn't have created so many jobs and financial outcomes for many later. Capitalism can be the greatest force for good, an intentional reference to conscious capitalism, a movement and organization that I love, and I link to that here on Medium. If we had sold early enough to enrich only ourselves, we wouldn't now serve over 2,000 clients around the world, including over 1/3 of the Fortune 100. We wouldn't have the potential today that the company does. Bazaar wouldn't be worth around $700 million. We wouldn't have created over 1,100 jobs. We wouldn't have 10 offices all around the world. Today, I find myself most proud of all the jobs we have created around the world, as well as the impact we have had on commerce overall. It has been soul-nourishing work, to say the least. You also have to have the right mindset on increasing the pie for all. Karma is at work here, and that mindset usually means you have to raise money to become the number one player in the industry. Funding. At some point, if you want to build a large company, you're almost certainly going to need to take funding. Companies like Apple, Facebook, Google, and Microsoft all had to do so. And even if somehow you avoid funding until your IPO, remember that an IPO is a fundraising event itself. If you have the mindset of, I need to own it all and I can never give up control, it will be very limiting in terms of your optionality to build a large company. You need capital to hire salespeople to capture your market quickly, or it is likely that someone else more aggressive will take the lead. Salespeople take a while to pay back, even in the best of business models. And when you think big, you think global, as we have at Bazaar Voice. Read Chapter 5, Bootstrap or VC, for more perspective on this. And remember that whomever you take money from, whether it is an angel investor or VC or private equity PE firm, that the partnership with them is like a marriage. You better marry the right person. Just like you better partner with the right people on your team. But it is easier to move on from your team than it is to move on from your investors. Also, it is very important that you maintain a bootstrap mentality to the greatest extent possible after you take funding. I suggest you read Seth Godin's brilliant book, The Bootstrapper's Bible, available for free online, and I link to that here on Medium. Brant and I read this book at the beginning of Bazaar Voice, and we really took it to heart. I wish I had done the same at Coremetrics, and it was ironic that I didn't, because I bootstrapped my first 3 businesses and they all had great cash flow. But it was the .com craze and all of the metrics, eyeballs, page views, and so on, that counted back then were squishy at best. Treat your money like it could be your company's last, because it may be. Culture. You need to constantly reinforce a culture of performance if you want to build your company for the long term. Performing at or above your goals gives you the freedom to build for as long as you would like, usually. One exception to this rule is if someone approaches your company with an offer that is too good to refuse. But again, we could have sold Bazaar Voice for $25 million, and we could have thought like that at that point in time. And there were other offers along the path to IPO that we also turned down. Instead, we had a longer-term mindset and a business model that deserved that kind of goal. As the CEO of Bazaar Voice, I was constantly reinforcing us building for the long term, and I'm doing the same now as our vice chairman. You can see how I'm doing so in the annual shareholders letter, which I link to here on Medium. Also, building a great culture will not only make it more fun for all of your team members, it will make it more fun for you too. You'll get caught up in the great cause, people, and environment just like everyone else. Man's Search for Meaning, one of my favorite books ever, addresses this in a profound way. I'll be writing a lot about culture on the Lucky7.io blog and on Medium over time. There is a lot I would like to share in this area, some easy to implement and some not so easy. For now, keep in mind that culture is something that you always nourish. Just like an individual person has to always nourish their soul. If you and your team do not focus on debating culture, just as you debate strategy, then you will not have as strong of a culture as you could, and your culture may even evolve in a way that you, as the founder, don't like. So stay on it, and you'll be happy you did. Note, this was originally posted on my blog at Lucky7.io, where I've been writing about primarily entrepreneurship since 2012. The original post is there, along with an interesting comments thread from years ago. I would love to hear how you think of this lesson and how you assess your company in these 5 key areas as an entrepreneur or team member of a startup. Or how did you assess one that you worked for previously? Please share a comment.